Good morning, everyone. We're going to just wait a couple more minutes and then we will definitely get started. Thank you so much for joining today. Good morning, everyone. We're going to just wait a couple more minutes and then we will definitely get started. Thank you so much for joining today. Good morning, everyone. We're going to just wait a couple more minutes and then we will definitely get started. Thank you so much for joining. All right, let's get started. Thank you guys, everyone. This is Get Ready for Tax Season. My name is Phyllis Johnson and I'm the owner of PKJ Consulting. For those who joined last year, thank you so much for returning. And for those new, thank you very much. Just some housekeeping items before we begin. Yes, this webinar will be recorded. It'll be given out on Facebook. It'll also be on my YouTube channel. If you haven't subscribed already, please go ahead and do so. And also be sent out via those who are my tax clients on TaxDome. In addition to that, I have someone named Jesse who's going to be helping me with any Q&A questions. So if you guys have any questions as the webinar is going on, feel free to type those questions into the Q&A. He will answer those questions as he can, and for any that he can't, towards the end of the session, I will review and answer as many questions as possible. So today we're going to go through a quick overview, an introduction of myself. We're going to talk about 2021 because we need to understand what happened in the past so that we can be ready for this upcoming tax season. We'll talk about the 2022 key changes for individuals and small business owners, go through some business tax write-offs, some end of the year strategies, some tips, and then also next steps and Q&A. For those who aren't familiar with me, my name is Phyllis Johnson. I am the CEO and owner of PKJ Consulting. We're an accounting and consulting services firm for entrepreneurs and small business owners. We do accounting, bookkeeping, taxes, payroll, and LLC startup services. I'm located in cold Las Vegas, Nevada. For those who've never been here, everyone always thinks it's hot, but it's like 40 degrees outside right now, so it's pretty cold. I have my bachelor's degree in business administration, accounting, and finance from Pepperdine, and my MBA with an emphasis in entrepreneurship management from UNLV. We do taxes for everything from 1040s, 990s, S Corps, and some C Corps. In addition to that, I am a QuickBooks Online Elite Pro Advisor. So let's talk about 2021. So as we all know, right, these past 2 years have been a little crazy with so many different changes, not only with the economy, but also with the taxes. So in 2021, there was the Advanced Rescue Plan, which was created to help stimulate the economy. However, that is now done and is not going to be renewed for 2022. So let's talk about some of the things that actually happened that helped your tax return that will be changed for this upcoming tax season. So that first one is that child tax credit. Okay, so now for 2022, it's going to be reduced back down to $2,000 per child. Whereas in 2021, it was up to $3,600 for children under the age of 6 and $3,000 for children 6 through 17. And it's no longer fully refundable. So as you can see from this credit, it's actually going to kind of go back to what it was in 2020 and before. And then that child independent tax credit. Now, a lot of people never qualify for this. What it was, if you had childcare or a babysitter, you got up to $8,000 for one qualifying person and up to $16,000 if you had 2 or more qualifying dependents. Now it's went back down to $3,000 for one dependent and $6,000 if you have 2 or more dependents. So as you can see, this is dropping back down drastically. And then the other one was charitable donations. So for many years, most people never qualified for this unless you did itemized deductions. Where in 2021, if you did a cash donation, there was up to a $300 for individuals and $600 for married filing joint. But this was not extended for 2022. So you should still give your donations. But unfortunately, unless you itemize your deductions as previously, you're not going to be able to write off those cash donations on your tax return. And I believe when I was looking it up, about 80 to 90% of people do standardized deductions. And those famous stimulus payments, right? So you had up to 3 stimulus payments over the last 2 years, and those are over. There's no more stimulus payments going out on a federal level at all. Well, currently, as of today's recording. Now, if you did not receive your stimulus payments, whereas in the last 2 tax returns, you were able to claim them, you cannot claim them anymore. So if you did not receive your stimulus payments for previous years, you need to go back and file those tax returns on the prior years. So what does this mean, right? So I went through all of these changes that are kind of been taken away. And unfortunately, this can result now in a lower tax credit, a lower refund or a higher tax bill. If you kind of got a huge refund last year because of these things, you're no longer going to, because these things were now went back to the 2020 years and before. And this is why it's really important to start preparing now for your upcoming tax season, because if you were relying on these items, it's not too late to make some changes or adjustments as needed for your tax return before January 1st. Now, here are some of the key changes for 2022 for your individual tax returns. Now, for those who know, I obviously do, mostly business clients and small business clients, but the way your business tax return is done also affects your individual tax return. So knowing about these changes are critical. The first one, which is huge, okay? So if you previously or even today are using a PayPal, Venmo, Cash App, Zelle, or any other third-party apps, that income is now being reported to the IRS. This is a big one for those who are like hairdressers or nail salons, or you're a barber and you've pre-used Cash App and you aren't reporting your income to the IRS. Well, starting this year, the IRS is going to report that income for you. So if you don't claim that on your tax return, you will get a bill based on what Venmo gives to the IRS. I'm going to talk about this a little bit later in detail, but it's very important that if you are receiving these type of items, that you now are going to have to claim this on your tax return. That child tax credit, it's now only partially refundable, which means that credit that you received on your 2021 tax return is not going to be anywhere as high as it was last year. Child care and dependent tax. So now for 2022, it's went back to you have to make $15,000 or less to qualify. I'm going to hope that most people don't qualify for this tax credit anymore. So this one is pretty much done. And then the standard deduction on a positive, it did increase slightly. So it's up to $12,950, up $400 from this current year, and then $25,900 for married filing jointly. So you'll see a small increase in the deduction that's going to lower your taxable income. Student loans. So, we've heard about the student loan forgiveness. It was on, and then everyone applied, and then it was fought over in Congress, and then it's back on. And so it's still kind of in the gray area. If you are someone who was able to get that student loan forgiven before the end of this year, you will not, as of today's date, and I say that because tax laws change constantly, but right now there's no federal taxes owed on that forgiven debt, which is great. However, if you live in certain states, they will be taxing those. So they haven't released the full list yet. I believe Mississippi is one of them. If you're someone who lives in Nevada, we don't file state taxes, so you will have to pay taxes on there. But in the next couple weeks or even months, they're going to start releasing the list of which states that if you got that loan forgiven, you will have to pay taxes on it. And then the retirement contribution. So this increased to $20,500. It's a $1,000 increase for this year. Now, this year has been tough for anyone who invests or has their money in a retirement market, but it's still not too late to do so. That's going to be right off on your tax return. And then cryptocurrency and NFT. Now, this is not new. This started actually last year where the IRS started cracking down on it. But they've hired a lot of agents to really kind of start digging in more and more. So if you have not been reporting this on your tax return, you must do so for 2022. And one thing I want to make sure that everyone understands, a lot of times people say, oh, I didn't report it previously and IRS didn't send me anything. The IRS can go back years and send you something from 2020, 2019. So just because they haven't sent you anything yet, it doesn't mean that they are not going to do so. I actually got contacted from a client today who got something from a 2020 tax return. So just know that you should be reporting your cryptocurrency and NFT on your tax returns. And you can even report your losses, which can help you offset any taxes that you may owe. So as you kind of can see the continual reoccurring thing here with individuals, there's not a lot of things for 2022 that are going to really help you with your tax returns. A lot of these things are going to make your refund a lot lower than it was in 2021, which is why I always tell people, if you can, and especially if you're on this webinar, most likely you come from some other webinar that I've done on small businesses. So for businesses, this is why it's important to understand how to structure your business and do your tax return properly to help offset some of that liability that you're going to have on your personal 1040 tax return. So some of the changes for 2022. The first one is the business meals deduction. It increased from 50% to 100% for 2021, and it's still there again for 2022. We don't know about 2023 yet, but at least for this year, all of those business meals that you've met with clients, those are now still fully a write-off for your current tax year. Form 1099-K. So I mentioned this in the prior slide because it's really critical because, like I said, a lot of us get money from Cash App, Venmo, PayPal, and we never previously reported it before. The good thing about it is that you can file what's called a Schedule C to write off the business expenses. So for example, you're a hairdresser, you made $100,000 and that 1099-K is going to go to the IRS. They're going to report that you made $100,000. You don't want to pay taxable income. You don't want to pay taxes on $100,000 if you don't have to. What you can do is you can write off those business expenses on a Schedule C. So your hair supplies, your booth rent, your telephone, maybe you had a PO box, you can write off all of those items. And so for example, let's just say you made $100,000 a year and you're able to write off $70,000. Now your taxable income for your business is only $30,000. Now, I don't know about you. I would rather pay taxes on $30,000 than $100,000. And this is why it's important that you just don't file your taxes and don't, take the due diligence and time to do those key write-offs so that you can save money on your taxes. The other one is a qualified business income. Now, this one is not new. It's been around for a few years, but I always want to bring it up, especially for those who are now going to get that 1099-K. It's for self-employed people and owners of LLCs, S Corps, and other pass-through entities like a partnership. You can deduct 20% of your qualified business income. So this is a huge one that will help you. Your taxable income must be under $170,000. So even if you file taxes on your own, not a problem. Just make sure that you're getting your qualified business income deduction. If you don't understand how to do that, make sure you work with a tax person who can help you with all of these different write-offs. The other one is the standard mileage rate. So now for 2022, the standard mileage rate for business driving increased 58.5 cents per mile, which is up 2.5 cents from 2021. So this is a good thing. So now if you're driving and keeping track of your business mileage, you can write off even more because, as we all know, gas went crazy this year. At least it's back down. Now, I want to make two really big caveats that just in the recent years that I've seen the IRS, as far as auditing or sending out notices, two things: meals and mileage. So M&M, meals, mileage are the two things that they are really looking at in detail. Because what happened in 2020 was this: people do their own tax return, right? And, we have a habit of not tracking our mileage. And so people would just write the exact same thing on their tax return of 2020 as they did in 2019. Well, 2020, nobody was driving, like very few people, maybe unless you were a nurse or a doctor, you were not driving the same mileage. And so what the IRS started doing was sending out notices of audit for you to prove your mileage. So if you just kind of estimate it, that is one thing that the IRS is going to look at. Is it realistic that you drove that many miles based on the current industry? Now, yes, things are open again, but I just want you to keep in mind that's something that they're also looking at. They're also looking at your business meals because people have been working from home now more. If you're eating food at your desk and you're not having a business meal with a client or something business related, it's not a taxable write-off item. And so people was writing off everything, right? All of your food, your kids' food, everything. And so that's something that can also get you audited. So just something to keep in mind and be aware of. So the net business loss, you as a small business can deduct a net trade or business loss up to a maximum of $270,000, which is an increase from 2021. So if you're running a business and unfortunately you have a loss, you can write off some of that loss and also carry it over for a few years. And then retirement plans. Now, this one also isn't new, but they actually increase it. So if you're self-employed and you set up an IRA, you can contribute up to 20% of your self-employment earnings, which is huge, which with a maximum contribution of $61,000 for 2022. So let's just say you are in your 50s and you just decide you're going to start a business, but you're worried about retirement. Well, if you made a lot of money this year, which hopefully everyone did, you could contribute up to $61,000 to your retirement plan. So it's never too late to start doing that, because one thing that I do see as self-employed people, we're just running our business, but I don't know about you guys, but at some point, I want to retire. So it's important that you're also, as you're running your business, not only think about like current things, that you also think about what's going to happen for the future. So we are in December of 2022. It is not too late to start a retirement plan. It's not too late that if you, especially if you're an S Corp, okay, if you're S Corp, it's not too late to put yourself on payroll and then have that retirement plan on your payroll. It's not too late to really start tracking your expenses for that 1099, looking at your business meals, really understanding some things that you can do for your business so that you can make sure that you are going to file your tax return properly next year. Now, let's go through some business tax write-offs. The first one is the home office. If you are working from home, you can write off a portion of your rent or your mortgage. Not everything. I understand you may be sitting on your couch watching TV, sending emails. That's not a tax write-off. But if you have a home office that is dedicated to your business, or if you run a business where you're selling products and you have your supplies like in a storage unit or something like that in your backyard, you can write off a portion of that, including the utilities and any supplies that you buy for your home office. So like this Get It Done thing that I have and this plaque up here thing, those are tax write-offs for my business. So anything that you buy supply-wise for your business, you can write off. You just want to make sure you're keeping track properly. You could also write off your automobile expenses if you use it for your business, a portion of it. So if I go meet with a client and I go to their office, or maybe I'm driving, I'm here in Las Vegas, and maybe I'm meeting a client in Phoenix and I'm driving out there to meet up with them, I can write off those expenses. If you are a person who primarily is on the road, so like you're a salesperson or you're a truck person, or you are doing hair and you're driving to people's clients' office and you're really just using that car just for that purpose, 100% write off. The other thing I suggest, if you are in that industry and you especially have a second car, put that business car in your name, okay? The other thing you can write off is insurance, business insurance, health insurance, liability insurance, any type of employees insurance that you have for them, that is a write-off. Interest expense, you can also write off the interest expense. So if you have, especially if you got that SBA loan, you probably all started getting those notices that it's time to start paying up. And the thing is, there's going to be interest expense on that loan or any other loan that you have, your credit cards, all of those are a tax write-off. So make sure you're keeping track of that properly. Your office rent. So you may have I have a home office, but I also have a remote office that I go to as necessary. So that is a write-off for your business. If you travel, now I'm going to pause here. for your business, the travel for the business is a tax write-off. And so this one is always key. I'm going to give a few examples for you guys that you can understand it, how to write it off properly. So I'm a traveler. If anyone has been on any webinars that I've ever done, that is the thing. A couple of days from now, I'll be on a cruise. So for example, I'll give that example. I am going on a cruise. It leaves out of Miami, which I hope it's sunny when it leaves, but I'm leaving out of Miami. The cruise is 100% personal, gonna, enjoy it. I come back. I actually have a remote office. The way my office is set up, it's an executive suite. They have them all over the world, technically. And so if I go to my remote office and I have a couple clients in Florida, actually, and they come to that remote office, any travel that I do to that remote office to meet up with the client, I take them out to lunch. Anything that I do in that essence is a tax write-off. The cruise itself, unfortunately, not a tax write-off, but anything else that I do that day is a write-off. On the flip side, a client is in Florida. They say, hey, we want you to come out here to do bookkeeping or accounting or any type of training in person. They fly me out there, right? But they don't pay for my hotel. If I pay for my hotel, it's a full tax write-off. Meals, everything that I do for that client, all of that is a travel tax write-off. Now, let's say I'm done with business and on Friday, I want to hop on a cruise. Not a write-off, but when I come back, everything else is. So you just want to make sure that it is business related. And I always tell people like this, think of it as, my mom worked at the IRS for 30 years, and one of the departments she worked in was the tax advocate department. And so think about if you're just talking to a regular person at the IRS and you're trying to explain why you wrote off your travel, it has to make sense. If it makes sense, then it's a write-off. If you know it doesn't, just don't. It's just not worth it to get those. It's not worth it to get audited, because once you're audited, you're on that list forever. The other thing you can write off is your independent contractors. So if you hire contractors, that's a tax write-off. They do not have to be in the United States. So if you have international independent contractors, you can write that off. If you have US-based contractors, you can write that off. Make sure that you're getting a W-9 for them, because in January, you do have to give them a 1099 if you pay them over $600. I'm always asked, well, how do I know if I have to give them a 1099? Well, the first thing is, did you get a W-9 from them? So if you got a W-9 and then they didn't mark that corporation box, you need to give them a 1099. Do not automatically assume that they are a C Corp or an S Corp, or just because they're your friend that you don't have to give them a 1099. Because what I've seen happen a lot of times is you hire your friend or somebody to work for you, you're paying them under the table, right? Because you don't want to document it. 3 years down the line, that person, you're not working with that person anymore, or, maybe you had a falling out. They go to try to buy a house. The first thing their tax person is going to do is do their tax returns for the last couple of years. And that tax person is going to ask for their 1099. They're going to say they didn't receive one for you. They're not going to say they didn't give over the information or any of that nature. They're just going to say they didn't receive one. That tax person who's doing the taxes can immediately and easily say, hey, I didn't get a 1099 from XYZ business. You will be fined if you do not give 1099s to your independent contractors. So just by default, do it and let them, if they don't file it on their tax returns, that's on them. But you, as a business owner, you want to make sure you're doing the right thing. The other thing that you can write off is depreciation. So if you have a building or you bought an automobile or anything like that, you can write off the depreciation on your assets. The other thing is internet. So internet, computer, if you buy a new computer for your business, software, phones, tablets, all of those things are write-offs. And also supplies. So I went through a long list of write-offs for your business. Are there more? Yes, there's plenty of write-offs for your business, and it always depends on what type of business that you're in. Which is why, if you don't know, I always say talk to somebody, or also research and, look up what is a legitimate tax write-off, because there's some gray area. And so when people ask me a hardcore question, it depends on what your situation is. So be careful about, kind of saying, oh, such and such said. Well, unless you guys have the exact same business and exact same tax structure and everything's the same, then, you want to make sure that you're doing it properly. All right, so let's talk about some end of the year tax strategies. Now, these strategies are only for me, I only talk about if you're a high income person. I'm always wishing there's a lot of money for people. So, like, I'm assuming based on these strategies that everyone made a lot of money and they don't want to have a high tax bill for their business. So, one of the first things that you can do if to lower your tax bill is if you have recurring expenses, right? So like maybe your Zoom or Google or anything like that, um, charge them earlier than usual, right? On your credit card. So like, let's just say my Zoom renews every single January and I want to lower my tax bill. I'm going to put it on my credit card for December so that I can claim that expense, right? But I don't have to actually pay that tax bill until 2023. So that's one way to kind of lower what you have to pay. Other expenses. So pay expenses by check. So you can write a check, mail it in a few days before the end of the year. So December 28th, right, or 29th. And the tax rule says that you can deduct those expenses the year that you mail the checks, even though they won't cash until the next year. So maybe you're paying an independent contractor a bonus, you mail it out, that lowers your tax liability. They're not going to cash until next year. Your taxable tax liability drops. And then prepay expenses. So you can also prepay some expenses before the end of the year. So like maybe your office rent or your annual insurance premiums that tend to renew in January. These are all things that will lower your tax liability because you're spending some money in your business. And so people say, well, how do I know? And I say, well, what do your financials look like, right? So if you're not tracking your financials, which we'll talk about later, you're not going to know that you should be taking advantage of any of these end of year strategies. And if you wait for 2 more weeks from now, it'll be too late. And then income. If you are a cash-based business, which most people are, just to give a caveat, a cash-based business is when someone pays me, I record it. If I send an invoice out and they haven't paid me, then it's not then I don't have to claim it. So I can send 20 invoices out, but if nobody pays my 20 invoices, that's a problem for my business. But also I don't have to claim that income. So if you are trying to lower your income, right, wait until the end of the year to send out invoices. So maybe you usually send them out on the 28th of the month, send them out on the 31st of the month. Now, of course, if someone on the other side is trying to take advantage of the end of the year strategies, they may still pay you on the 31st if they're trying to do the same thing. And then donations. So remember I talked about earlier as an individual, right, that you cannot no longer write off your donations unless you itemize your deductions. However, if you are a business owner, consider giving donations as a way to give back, but it's also a tax deduction. Now let's go through some helpful tips that I have kind of talked about. The first one is get organized now, like today, like as soon as we got off this call, because hopefully you kind of see that you need to kind of understand what your tax liability is now or even some months ago versus waiting to January. Because what happens is once January, February hits and you're ready to do your tax return, it's too late to make any changes. It's too late to figure out what your expenses to be is. It's too late to try to remember, maybe some personal things that you put on your personal bank account back in January 2022. Most of us can't remember what we had 3 days ago to eat. So you want to start getting organized. You want to start, like, you're not going to get your W-2s till January, but you want to start getting a folder, right? Or if you are one of my tax clients or would like to become one, Jesse could put it in the Q&A, but there's pkjconsulting.com, taxdome.com, where literally like my clients throughout the year will start uploading any documents that they've received throughout the year. So start gathering that stuff as soon as you get it, because what happens during tax season, if you can't remember where it is, it's harder to find that information and to get it from somebody or to try to like recreate it. So get your W-2s together as soon as you receive them. You can even start logging into any like your ADP or Gusto or something, looking at how much you made. Get your 1099s, 1099Ks, all that stuff's going to come out in January. I'm just saying, start creating the place of where you're going to keep this information, right? Your financial statements. You should already have financials through the end of, at minimum, September 30th, 2022. If you do not, you need to start doing that. That is the number one thing that I see clients do. That is the worst thing that you can possibly do as a business owner, is to wait until you're doing your tax return to either A, try to do it yourself, or B, have an accountant or bookkeeper do it for you, which is to try to have them do your bookkeeping for an entire year. It is the worst thing that I see, because multiple things happen. Number one, if you're doing it yourself and you're not a bookkeeper, not saying that you can't, but you're going to miss certain things. It always happens. Even if you're doing QuickBooks yourself, I have a lot of people who are like, oh, my QuickBooks is done, it's reconciled. And I'm like, great, okay, well, send me your income statement and your balance sheet. Balance sheet, what's that? And I'm like, well, your balance sheet shows this, 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 and this. This is all incorrect. So you've been doing all this throughout the year. And just from a 5-minute glance, because I'm an accountant and I am in QuickBooks every day, I could just take 5 seconds and look at someone's QuickBooks and I can literally know if something's wrong immediately. So now you spend your whole entire year doing bookkeeping where you don't like it. And now on top of that, I'm telling you it's wrong. And you're going to now hire me to fix it because you got to hurry up to get your taxes done. And now I'm going to charge you way more, or a lot more than I would if I would have been doing it throughout the year. Or instead of, maybe, let's just say I charge you $500 to clean it up. Imagine having that $500 spread out over 12 months, right? Versus like this huge $500 cleanup fee and still having to pay for taxes. The other thing that tends to happen when you try to hurry up and wait till tax season is everything I talked about before. A lot of times we don't think about how much we make. So I always meet with clients, they're like, how much money did I make last year? Oh, I made a lot. And it's like, yeah, you made a couple $100,000. A lot of times we're not even thinking about that because we're so busy running our business. However, if that ends up happening to you, great. But the worst thing about it is if your net income is $40,000, $50,000, $60,000, the IRS wants their money. If your net income is that much money, and we could have met in like October, November, December to kind of start coming up with some strategies. Are you an S Corp? Should I increase your pay? Should you start buying stuff? Maybe you were thinking about hiring someone. Maybe you should. Independent contractor, all of these strategies to lower your tax liability. If you're waiting until after the tax season, you can't do it anymore. I have people like, oh, I'm not going to report some of the stuff to the IRS. Okay, that's fine. The IRS is going to, I'm not doing your tax return, but the IRS is going to send you a letter and you're going to ask why they sent you a letter. And it's because a lot of times, like if you have that PayPal or you're doing QuickBooks or Square or Stripe, they report your income. So if you don't report it, they're going to report it. And so the benefit of doing the financial statement is the income, yes, but the number one thing is the expenses, like writing off all these things. You're spending so much money keeping your business going. You need to understand what your profit and loss looks like today and not in January, February, March, April. You need to know what your balance sheet looks like today and not later. You need to know what a balance sheet actually is. And so you really want to start doing that. You also want to make sure you get your K-1. So if you were part of a partnership or an S Corp, you want to make sure that you get that document for your tax return. You cannot, excuse me, you cannot do your personal tax return until those partnership or S Corp tax returns are done. So I see people say, oh, well, I'm part of a partnership, but they haven't given me the K-1 yet. They're not done yet. I just put some money into this business. And then you file your tax returns and you get your K-1 later. You have to revise your tax returns. So you want to make sure you get those documents, your virtual currency transactions, and then that Form 1095-A. If you get it from the marketplace, pull that down as soon as like January comes and then put it into your tax software so you can keep track and you're not missing anything. So I talked about this deeply already, bookkeeping, review and prepare your financials. We are already in December, but it's not too late. You still have a few more weeks to literally start working on this, getting it done. Make estimated tax payments as necessary. If you are a high income person, especially for a business owner who runs a service-based business without a lot of expenses, people like to wait until they get that huge tax bill. It doesn't make any sense. If you've ever owed taxes and you owed a lot of money, take 25 seconds, look at your 1040, and it's like really small writing, but it says estimated taxes penalty. So if you make a lot of money and you don't give any money to the IRS throughout the year, not only do you have to pay them, you usually have to pay a penalty, but on top of that, they're going to fine you for not making estimated tax payments. So what you should be doing, and you should do it every quarter, but really you can just send whatever you need to. The question I'm always asked is, how do I know how much, or how much should I be giving them? How do I know how much? That goes back to bookkeeping. If you are working with your bookkeeper or accountant, they can immediately tell you, hey, you need to send X, Y, and Z to the IRS. I have a client, she started her business I was working with her 2021. She was just a 1099 on her own by herself. 2022, she started her own business. She's in the mental health services business. She's killing it this year. It's amazing. She has like 8, 10, I think we're up to 12 people on staff in 1 year. She's doing really, really well, which is great. But also on the other side, it's like, hey, you need to start making these estimated tax payments so that when April comes, you're not going to owe so much money or anything at all. If you overpay on estimated tax payments and you file your tax return and you've paid too much, you're going to get a tax refund. So just something that you need to think about doing throughout the year. Contribute to your retirement plans. I know the economy is not amazing right now, and I wish it was better. But there are some like mutual funds. I am not an investment broker, so don't ask a bunch of questions like that in the chat box. I'm just going to say, do your research. But if you haven't put that money into the retirement plan, it's also a write-off. And I've went through a lot of stuff. So one thing I would say is hire a professional to review your information for 2022 before the end of the year or before you file your taxes. Because yes, you can do it yourself, but myself and other tax professionals, our job is to always stay on top of any new tax laws. So if you are a restaurant owner, I can guarantee you probably know all the new restaurant laws and all that stuff because you're staying on top of that. You're in Facebook groups, you're doing research, you're Googling, that is your world. You're talking to other restaurant owners. And so I see way too many people try to do stuff on their own, which you can. But when you get those letters or you do something wrong, or I'm looking at prior information, I'm like, oh, you could have did this, this, and this, and this. Like you're spending a lot of time, which is money, and you're spending a lot of resources instead of making sure your information is done correctly before you file your taxes. So the last couple of items I wanted to go over before I jump in and answer any questions. So if you do want to schedule a tax consultation with me, you can go to Calendly.com. For those who are who work with me, they know that's my favorite link to get in contact to schedule a consultation to go over anything. So whether it's your bookkeeping, or you want me to look at your QuickBooks or your prior tax return, which I do as well, any payroll questions, anything like that, you can schedule that consultation. Or I have clients who just want to talk about their business and strategy. You can schedule that consultation with me by going to Calendly.com/PKJ Consulting/consultation. If you are interested in having me do your tax return, you can get started at pkjconsulting.com taxdome.com/login, or email taxes@pkjconsulting. So I saw that some people started signing up when I sent out the information for the webinar. Thank you so much. And what I will be doing in early January is sending out that email to say, hey, start uploading your documents, getting everything organized, getting everything done. Just for those who are not aware, TaxDome, think of it like if you're doing your taxes on TurboTax somewhat, but it's really more geared towards business, organization. You can ask questions in there. Somebody will respond to your messages, your emails. It's an app on your phone. So it's a secure place for you to start putting all your tax documents in, getting your taxes done. Everything is like automated. I also meet with you as soon as your tax return is done. It just makes your life a lot easier and the stress a lot lower. And then if you are interested in, me doing your bookkeeping or accounting, feel free to send an email to info@pkjconsulting.com. So I want to say thank you guys very much. I am going to now hop into the questions, but I do appreciate you guys joining, and let's see what questions we have. Okay, so we have Wendy who asks about 2022 taxes. What is the amount we are allowed to deduct for charitable donations? So Wendy, if you are an individual, unless you itemize your deductions, unless you do itemized deductions, that's the only way you're going to be able to do it. So how much do we need to donate to? There's no how much. You can donate $1 and you can write that off if you itemize your deductions on your personal. On your business, you can donate as much you want. It's just going to be capped based on other items on your business. Okay, Maduri, do camps count towards the child dependent care and tax credit? Yes, so you have to get that form, but you have to make under $15,000. So think about it. If you don't make, if you make more than $15,000 in a year, you're not going to be able to write off any of that stuff anymore unless you haven't filed your 2021 taxes. So do the camps and all these other things count? Yes, but if you make over $15,000, you're not going to be able to write it off. Okay, so Midori asks another good question. Is travel to a business conference or class a write-off? That is a great question. Yes, travel to and from a business conference, including the flight, the meals, the hotel, the resources, the conference itself, is all a tax write-off. So anything educational for you to grow your business, like let's say you are running I keep saying hair salon, but hair salon, you go back to school to become more certified, or maybe you're starting a law business. Anything that you go to school that's related to your business is actually a tax write-off. Okay, Lakivia asked, what form is used to write off business income? Schedule, well, let me make sure I say this properly. So if you are an individual or an LLC owner, sole prop, one person owns it, you file a Schedule C. If you are an S Corp, now you had to become an S Corp to be an S Corp, so you should know if you are, that is going to be on your 1120S. If you are a C Corp, that's going to be on your 1120. If you are part of a partnership, meaning that maybe you and somebody else started a business, then it's going to be on your 1065. Make sure you know what you are. I see that often sometimes where I'll file somebody's taxes and the IRS will just reject it because they think they're an LLC, but they accidentally set up a C Corp or something like that, or they thought they were an S Corp and they're a C Corp, or vice versa. So just make sure when you get that EIN document from the IRS that you're keeping it, because if you have a tax person or yourself, you try to file your own S Corp taxes and the IRS rejects it, not a problem, but then the tax person or yourself, you're gonna have to go back and file a whole new tax return. So just make sure you know what your form is before you start filing that, because it also affects how you do your taxes. If you're a C Corp, your taxes are totally different than if you are a LLC. All right, Marja asks a good question. So if you have an LLC, can you pay for your health insurance with business funds? Yes. And Midori's asking some really good questions. Keep it coming. So do professional development courses count as write-off? So yes, I think I just covered that. Anything that is for your business. Now, I do accounting, I'm an accounting, bookkeeping, numbers person. If I decided I wanted to open up a restaurant, that's not a write-off. But if I want to go to school to learn about doing bookkeeping for a restaurant owner, that is a write-off. What methods can we use to keep track of expenses? I'm only going to really talk about the main one, which is QuickBooks. QuickBooks Online is a great tool. There's a lot of other different bookkeeping softwares. There is also Wave, which is good. There's also FreshBooks, which is good. But I definitely say QuickBooks, just because for me, when I'm thinking about businesses, I think about growth. So like QuickBooks has a very $25 a month simple start plan that grows with you. So like if you're using some of these other platforms, they're more geared towards really small businesses. And I like all my businesses to grow. So as you need to do more stuff, some of these platforms may not be able to. Now, if you're in the beginning stages of your business and you're trying to keep your cash flow as small as possible, there's nothing wrong with using Google or Excel in the beginning stages, in the beginning, because you want to be able to create that Schedule C, and you want to be able to create a profit and loss. But more importantly, and this is the number one reason why I say only in the beginning, I didn't talk about this because this is more of a tax webinar, but if you're trying to get grants, funds, loans, all of those other things, they're not going to take your Excel documents. They want to see those financials from a professional software. So the worst thing you could do is do Excel for 3 years in your business, and then you're finally growing it and you're finally going to open up that brick and mortar. And now you have to go back and put all this information in the software so that you can create these financials. Okay, so Alondra asks, as an LLC, does my business qualify to file an 8832? It depends on what type of LLC that you have set up, Alondra. Is that to become like an S Corp or a C Corp? So anytime you are an LLC, yes, you can file a form to become an S Corp or a C Corp. Tiana asks if the slides will be available. So the webinar will be available, but not the slides. Marja asks a really good question. That's a good question. So can companies make charitable contributions with business funds? Yes, you can. So if you are a business owner, you can actually donate to another business, and that is a tax write-off for you. All right, so April asked the question, I answered it, but do you have a recommendation for bookkeeping tools if doing it yourself? I'm gonna say QuickBooks again. Or yeah, I mean, because I say QuickBooks only because it's the software that you could do everything with it. You can send invoices, you can do your bookkeeping if you're doing it yourself. So like I have clients where they do their bookkeeping throughout the year, they have small businesses, but you can also invite your accountant. So I'm added as their accountant. So like they will schedule a random QuickBooks training session with me and I could do the training session with them. Or they'll schedule like a 1 hour, hey, can you look at my QuickBooks, make sure I'm doing the right situation. So they're using QuickBooks, I go in, I check it, you know, $100 or $150, it looks good, and they can go back and keep using their software. Hi, Tafari, thank you for joining. So Tafari is one of my clients. So she donated a product to a 501c3, which is great. You just need to get a document from that 501c3 that says what you donated and the value of the donation. And yes, okay, that's a good one. So I talked about that earlier. She asked if she paid for a 2023 conference this year, can she write that off? Yes, you can write that off. So remember I said, if you're trying to lower your tax liability for this year, you can pay for things for the future. So you can pay for any 2023 classes, conferences, educational thing, anything that you need to. You pay your office rent, you know, up front. You can pay your telephone up front and write it off for this current year if you need to, which means knowing if you are what your tax liability is. So if you have a huge loss in your business, you know, if you need these things, yes, but you should then just wait till next year because there's only so much loss you're going to be able to write off. All right, so Tiana asks, do we file state and federal business tax? That depends on what state you're in. If you are in a state where you have state taxes, then yes. So it just really depends. Like I'm in Nevada, there's no state taxes here. If you live in California, there's state taxes there. So Tafari, I'm going to say, so she's asking if she gives a product to a 2023 retreat as a sponsor. Can I write that sponsorship off? So that's a bartership situation. You just have to get documents for that. But that also means looking at your financials. Oh, now that, so Alondra asks a great question. Is a service eligible to write off a language class? So I say it's a great question because I am learning Spanish currently every day. It's one of my goals to be super fluent, fluent in Spanish. I actually have clients. So that's a good question because I have clients in South America, actually quite a few clients in South America. And so that's just one of my goals. So is it eligible if it's required for your business? Yes. So like, let's just say you are going to be spending a year in China for your business because it's related to your business, learning Mandarin, not necessary because they speak English, but it would help. So a lot of these things like what is a write-off? I say it depends because it depends on what your business is, right? So like I own a bookkeeping accounting company, but it's consulting. So if I'm consulting someone anywhere and it's business related, technically that is a write-off, right? And so if I need to fully speak Spanish to this person and I'm going to now expand, like open PKJ consulting business in like Colombia, for example, I need to learn Spanish, right? So it has to just be related. All right, let me see if there's no other questions. You guys asked some good questions. So I'll stay on for a few more minutes to see if there's any other questions. But if not, if there's other slides that you want to go through. Okay, so Elizabeth just popped in with a question. Can you merge My Excel into QuickBooks Online? So you can't merge it, Elizabeth. Thank you, Midori, and I love your name. You can't merge it into QuickBooks Online. You can import certain parts of it into QuickBooks Online, but not all the transactions. So the answer to that question is no, and you can import pieces, but not all the transactions. So that's why I said it's always important when you start your business to at some point get off of those type of documents, because when you're now trying to go to the next level, it's hard to pull all that information in. You're pretty much going to have to recreate it all over again. All right, any other questions? Thank you everyone for saying thank you. I really do appreciate you guys joining today. I hope it's warm where you guys are. All right, I will stay on for about 2 more minutes. Thank you you're welcome, Alondra. And Tapari booked her session for next week, so good job. See, she listens. So all right, guys. So just I know I see Jesse kind of popping in and putting all of the answers in there. Thank you, Shayna. And you can go here if you want to schedule a consultation. Any questions or anything, feel free to email me. I appreciate everyone. Kanika's asked another question. She didn't get a W-9 from her contractor. It's never too late. Like, you need to, yes. So start asking now. Just send an email to them. If they never respond, send an email 3 or 4 times, so that if you get that notice from the IRS that you didn't file a 1099 for that person, you at least have proof that you tried to get one for them. So that's not a problem at all. Thank you. You're welcome, Heather. All right, guys, I'm going to close it out. Thank you so much and have a beautiful, beautiful day, and happy holidays to everyone.